You're trusting someone with your financial future, but what if that trust is misplaced? Welcome to Investor Insight. I'm your host, Rob Sousa. Today, we're pulling back the curtain on a growing concern in the investment world. Are financial advisors truly acting in your best interest? Or are hidden agendas eroding the quality of services investors deserve? If you've ever wondered whether you're really getting what you pay for, this episode is going to be for you. In today's show, we're going to uncover the difference between an investment advisor and a financial planner, or as some call them, wealth managers. And joining us today to unpack this conversation topic is Scott Chelberg, a certified financial planner or CFP and certified exit planning strategy for business owners based in Carlsbad, California. And Scott, congratulations, just celebrated his 40th anniversary in the financial services industry. So he is no stranger to the world of finance. Thanks for joining us today, Scott. And so, Scott, there's a lot of talk about how investors have been kind of left in the dark about their advisors' true roles and titles and certifications. Some investors feel like they're a little lost or misled sometimes because of this, or worse, some of them feel cheated by the very people they trusted with their hard-earned lifetime savings. And so are we dealing with a systemic issue or just bad actors in the industry?
Well, first off, Rob, thanks for having me, and I appreciate the congratulations on my 40th anniversary. It's been a fun ride, and I think it's actually both. I think it's systemic, and we also unfortunately have some bad actors like most industries do.
Yeah, I agree, and in every industry that exists, even our neighbors down the street. So it's good to have discernment. But there's a lot of confusion out there about the difference between an investment advisor versus the financial planner. So first off, can you help us understand the difference and why should the average investor care?
Well, it really comes down to their offering. And so you think about an investment advisor's title, they're really advising you on your investments. So they're making recommendations on how to allocate your portfolio, what stocks or bonds to buy and sell, what annuities, anything else that goes into your investment portfolio. But they're sticking to that box, if you will. Where we go over to the financial or the wealth advisor, and the box is much larger. So they start with have a full understanding of your entire financial picture. They want to understand your cash flow, like what income's coming in, what expenses are going out. They want to understand all your risks that you're exposed to and how you're covering those risks with different insurance policies. They want to understand your estate plan and understand your estate planning documents that you have, your trust, your wills, your direct positions, and durable powers of attorney. And then most importantly, a lot of people really overlook is your tax situation. They want to understand your complete tax situation. So can you imagine your investment advisor giving you investment advice on your non-retirement accounts that have exposure to income taxes, but they have no idea what your income tax return looks like and what they may be causing as a trouble in the way of income tax exposure, whether it's capital gains or ordinary income tax. So that's a real concern, and that's the big difference.
And that makes sense based on the interviews that I've done over the last few weeks, and spoke to one couple that were extremely frustrated because they had anticipated that they would have a certain income. They were told they could take 4% of their retirement, their tax deferred retirement fund or IRA. And once they realized when they took that 4% in year one, that it was taxable and that they were actually going to have to live on 60% of that income because taxes are due on the other 40, they were absolutely disappointed and frustrated, feeling like they had been misled for decades.
And unfortunately, Rob, that's a real common problem. And so with the financial planner's perspective, they have it all mapped out in their softwares to where the income is going to be coming from and what the taxation on that income is going to be. And with a good financial planner, they're going to keep you in your bracket and not bracket creep you up by taking withdrawals out of the wrong account. And when you take the withdrawals out of the taxable account, you could also be exposing yourself to additional taxes on your Social Security and Medicare, et cetera. So it's a broader picture than just looking at what is my investment portfolio causing in the way of taxes.
Do you think people are truly aware? I mean, the average American, are they truly clear in their mind about their expectations for what they're going to be able to get in net spendable income in retirement? Do you think that advisors across the nation are prepping enough people to really be able to honestly have a clear picture about what retirement is going to look like?
Again, unfortunately not. And again, if you're just working with an investment advisor and they're not having everything mapped out in your written financial plan, there's no way they can actually calculate the impact of taxes, the impact of inflation. What's going to happen when you turn 65 and you go off your company medical benefits and you turn over to Medicare and a supplement, how your costs may drop? And so understanding all those components is required to have a good understanding of your financial picture. And we like to say we provide financial confidence in retirement. And I can't imagine having any confidence without having a full picture.
Yeah. So how do, as a certified financial planner, how do you, do certified financial planners have background experience and training in tax and legal? Because it sounds like being more comprehensive in your planning, how can they trust that a financial planner has experience, training, or certifications in these other areas that aren't really specific to investing?
Well, the nice thing about the Certified Financial Planning Program is it does cover all those areas. And so you're actually tested in each of those categories that you just mentioned. So you have to have a thorough understanding of just investments, but taxes and risk mitigation and insurance and estate planning. So, and in retirement plans. And so you have all these different components that go into your training. But that doesn't mean that you're necessarily a financial planner because you're a certified financial planner. You may be just an investment advisor because your compensation is based on getting assets under management or selling commission-based products, mutual funds, ETFs, annuities, and things like that. But they're not looking at the broad picture. So your credentials may not tell the whole story.
It seems like there's a conflict of interest for a lot of financial advisors. How does somebody navigate that world of understanding what those conflict of interests are and being able to identify that the advisor they want to work with is not affected by those conflicts of interest?
That's a great question. And I think you always have to have that perspective of where is this individual coming from? And so it's often conflicted based on how they're compensated. So if they're an investment advisor and they're compensated on putting assets under management and charging you a fee, but they're not compensated for doing a full-blown financial plan and looking at all the other components, then you know where that individual is coming from. Whereas a financial planner who's charging you a separate fee to do the heavy lifting and create the financial plan and keep it up to date on a regular basis, along with your investments, and oftentimes they're getting paid by assets under management also, but their fees may be equal or lower than the investment advisor, but you're getting all of the benefits of the financial plan and the comprehensiveness that goes into the planning process. So the good question is, are you fee-based? Are you fee-only? Or are you both commission and fee-based? And having a good understanding of the differences is really important.
And so our financial planners, what resources do they have? Let's just say you're recommending restructuring where their assets are at. Do you have partnerships or strategic partnerships at which they can consult an attorney or they can consult a CPA? to be able to vet out the viability of any plan that's so that people don't have to go to a different organization or third party and get different opinions, and it gets complicated. How do you vet or allow your clients to vet the authenticity of whatever proposal you're putting in front of them?
Well, I think it's really important to have those trusted advisors in your camp. And so if the client's in need of a living trust and all the other legal documents, it's nice to have 2 or 3 really quality estate planning attorneys that you work closely with. And so when you make an introduction to those trusted professionals to your client, that they're in good hands. And not only that, but there's communication going on. So the estate planning attorney understands what the client's needs are and understands what the financial planner's perspective is on what they need. So it's all coordinated. And unfortunately, we don't see that all the time, especially with business owners, because business owners, their biggest assets, their business. And unfortunately, we see it all the time. Their business isn't even owned by their trust. So they have this nice legal document, but it's not controlling one of their biggest assets. And so it still ended up with a mess.
So it sounds like you work together with a team of strategic partners, which is collaboration is great. And I hear a lot of interviews of people, getting different opinions, and there's communication going on, but it's not always good communication, because somebody the other day was just telling me about they were having a 3-way fight between their attorney. No, it was their CPA, who was saying one thing about taxes, which really was about taxes within that annual year. And so they didn't want to address taxes theoretically 10 years in the future in retirement. All they cared about was the tax deduction today. And then they had their investment advisor, who all he cared about was return, didn't care about taxes. And then there was an insurance agent who was suggesting an insurance product of which the investment manager was saying is a really bad idea. I would never do that. So you have 3 professionals debating and arguing and confusing the consumer, where they get to a point where they don't know who to believe.
That's sad and that's confusing. And unfortunately, that does happen. And so I think what we have to do is we have to look at the CPA's role and help them understand the work that we're trying to do as financial planners is not just lower their income taxes or mitigate income taxes today, well into the future when it could be very important. And so taken from the insurance salesman's perspective, he's probably or she's probably coming to them with an idea that's going to allow them to grow some assets tax deferred and take out the benefit without paying taxes. And the benefit to the client is when it comes time to retire, it's nice to have different buckets of money with different taxation. So you have levers to pull as an advisor to mitigate the taxes and keep them from bracket creep. So you can take a certain amount of money from taxable accounts and be offsetting that with perhaps some large medical expenses you have that year. Or maybe you have a taxable loss in your portfolio, and therefore you can take some additional gains in your portfolio. We call that tax loss harvesting. So you really need to get those 3 professionals in the room, but somebody has to be the chief in charge. And the most qualified person is typically the certified financial planner. And they need to get the tax advice from the CPA and the insurance strategies from the insurance specialist and coordinate that on the benefit of the client.
And that's kind of what I was getting at, is like having a team of people that are all in agreement. I think if you can find 3 professionals under the supervision of a licensed financial planner, and then also if you're licensed on both the life insurance and the investment side, does that automatically make you a fiduciary? And can you explain what fiduciary even means for those who don't know?
Well, that's a very misunderstood term, and often, unfortunately, it's misused. So as an insurance person only, and you're not licensed through the SEC as a registered investment advisor or through FINRA, the governing body for the NASD licenses like Series 7, et cetera, So your only insurance license, you have no fiduciary responsibility. You have best interest of your clients. Whereas if you go over to a certified financial planner who's also an investment advisor representative, part of a registered investment advisory firm, I'm trying to stay away from a lot of acronyms here.
Yeah.
But if you're part of that RIA, that registered investment advisory firm, you have the highest standard of fiduciary. So you're required to be working in your client's best interest, and you're held to a fiduciary standard. You're also held to a fiduciary standard as a certified financial planner. So you basically have two different organizations, and sometimes three different organizations: the CFP board, the SEC as a registered investment advisor, and FINRA as a licensed investment advisor, overseeing what you're doing and making sure that you're doing everything in the best interest of the client.
So it sounds like the certified financial planner is, because it's financial, is really kind of the umbrella at which they can get advice even from other experts within that plan. But if you have a leader, certified financial planner who's endorsing the recommendations of an investment manager and also the estate planner, attorney, and the CPA, would that be a good confirmation that maybe that's good advice? And if four people are in agreement?
I think that's a great way to go. And that's what we strive for. And we have a bank of certified, trusted experts in each category. And another category that we haven't spoke about is covering your risk with your personal liabilities and your business liabilities. And I'll tell you, one of the things that we see often is people have automobile coverage from one company, a homeowner's policy with another, and maybe they even have an umbrella with a third, but their liability limits aren't coordinated. And so they have liability limits that stop at a certain level on their base policies, and their umbrella policies don't kick in until a certain level. So that gap between them, that's personal liability. So you might have a $250,000 or a $500,000 gap between your umbrella and your personal coverage that you don't even know you're exposed to because you're working with two or three different companies. Or if you have one really good property and casualty agent, they're going to coordinate that coverage for you and make sure that there's no gap. You're fully covered.
It sounds to me like the takeaway from what I'm hearing you say today is to try and get all of your advisors in agreement on a single plan so that everybody's on the same page to ensure there are no gaps, whether it be in investing or whether it be in liability insurance or anything else. If you can get a team of people all communicating to each other in an agreement, that is the best affirmation that you're headed in the right direction.
100%, Rob. Well said.
Okay, well, I appreciate it. So that's the takeaway from today. But the lines between investment advisor and financial planner, it's more than just semantics. And that's the point that we were trying to make today. And Scott, thank you for making it so much more clear for all of us. And they have real consequences for your financial future and your family's legacy. So the next time you're sitting down with an advisor, make sure you know what you're getting and ask those hard questions that Scott brought up today. And if you're not getting the full picture and all of your advisors on the same page, it may be time to take a step back and reconsider. Go get a second opinion. Scott, if they'd like to can they get a second opinion from you to see if they're on the right track working with the right team?
Absolutely. We do that often. And sometimes we give them that stamp of approval, like you're on the right track. And oftentimes we'll share with them where they're exposed and where they need improvement and how we might play a role in that.
Okay. Yeah. It's just like any medical procedure. Somebody's telling you, you have cancer. And so we're going to do surgery and remove your eye and you're going to lose your eyesight. Well, if I were you, I'd get a second or maybe even a third opinion before you say, okay. Right. So There is a lot at stake. And so it's important. Don't move blindly forward. That's why we did this interview today. Scott's educating us as a financial insider, and get your team all on the same page and agreement, or go get a second opinion. Scott, thanks for your time today and your insight. I'm sure all of our listeners will be thinking twice about who's really looking out for their money.
Thanks, Rob, for having me. It's been a pleasure.